Ladies and gentlemen, Panda Trader here. Welcome back. Today we are not looking at one trading session. We are building a complete game for the week ahead. In this video, we will review what happened last week, identify where liquidity is sitting right now, and build a trading plan using the weekly, the daily, the 4-hour, and the 1-hour chart. So let's get started. Right now, gold is in an interesting spot. After a strong long-term uptrend and a sharp correction lower over the past few months, price has just produced a very strong push to the upside right here. So right now, we are seeing an expansion move to the upside after weeks of correction and consolidation. This is not a quiet ranging market anymore. Momentum has clearly shifted. Last week, price opened lower and spent the first part of the week building higher. On the daily chart, we can see the price started near around 4,000, this 4,000 level, and pushed strongly higher, closing above around 4,341 level. This was a clearly bullish week. Price broke above the recent daily highs and that had kept on the market for most of July, and it is so with strong white candles. This tells us buyers was in full control by the end of the week. Let's zoom out to the weekly chart. Looking at the bigger picture, gold had a massive uptrend that ran for many months, moving from around 3,200 levels all the way to around 5,600 levels. After reaching that high, price corrected hard, pulling back down into 4,000 and 4,100 region over the following weeks. For the past several weeks, we can see the weekly candles have been mostly small and bearish to neutral, grinding lower and forming lower highs and lower lows inside the correction. But this more recent weekly candle is different. It is a large, strong bullish candle, as you can see here, one of the biggest up candles on the entire chart. This is a significant shift in character on the higher time frame. There are no premium or discount zone on this chart, so I'm not going to get exactly where the middle of the range is. What I can say here clearly is that price is still trading well below the highs we made earlier this year and much closer to the lows from over the past couple of months. So structurally, we are seeing an attempt to reverse of the lows of that larger correction. For next week, this tells me the bias is shifting bullish, but we are still early in that shift, and I want to see this confirmed on the lower time frames before treating it as a full trend change. Moving to the daily chart, you can see gold fell from around 4,750 in the middle of May, all the way down to the lows near 3,950 by late of June. After that low, price moved in a choppy range and mostly trading between 4,000 and 4,200 through most of the July. Then in the first day of August, we get a clear change. Price broke about that range with strong bullish candles, as you can see here, pushing from around 4,050 to 4,341. This is a clean breakup structure to the upside on the daily time frame. The daily trend, which had been bearish since May, is now showing its real first side of a higher high being formed. Does the daily confirm the weekly bias? Yes, it does. Both time frames are now showing the same story, a strong bullish push after a long period of decline and consolidation. When the daily and the weekly agree like this, it gives more weight to the idea that we could be looking at the start of a larger upside move, not just a temporary bounce. Now let's get to the 4-hour chart right here, because this is where we really start building our plan. Looking at the late July, price found a low near 4,020, then moved sideways in a choppy range for a few days. Around August 4th, we can see the real move begin. Price broke higher with strong white candles, moving impulsively from around 4,080 all the way up toward the 4,375 by August 7th and 8th. After reaching that high, we can see a small pullback with the most recent candles cooling off slightly around 4,325 to 4,341. This move is clearly impulsive, not corrective. The candles are wide, the pullbacks along the way are shallow, and there is very little overlap between candles during the push higher. This confirms the higher time frame bullish bias. The 4-hour chart is telling us buyers step in with a real strength, and so far, the pullback we are seeing at the highs looks more like a pulse than a reversal. Now let's build the actual plan using the 1-hour chart, since this one already has some structure mark on it. Going back to late July, we can see a breakup structure to the downside, followed by a corrective channel, and where we price build a change of character inside it. After the channel, price broke down again with another breakup structure before finally reversing with a strong breakup structure to the upside around 4,116 level. Just below that breakout point, there is an order block marked on the chart. This is the zone that fueled the entire impulsive move higher. Sitting on the top of the order block, we can see a clear heavy concentration volume on the volume profile, showing this was an area where a lot of trading activity took place before expanding upward. As price push higher, we can see a change of character, followed by another zone marked as an inverse fair value gap, sitting just under the 4,231 level. This is also an horizontal level marked on the 4,178, sitting between the order block and the inverse fair value gap. From there, price continued climbing along a rising trend line, eventually reaching a high mark at 4,301. Our current price is sitting around 4,341, right in between those two levels. So for this week, my potential buying areas at the order block zone below. The inverse fair value gap is in the middle of the range, and the rising trendline support since all three of these are marked structure zones on this chart. My potential selling area if price get rejected would be up near 4,371 high. Since that is the most recent liquidity is resting above the current price. Before entering anything, I want to confirm. That means I want to see price react at one of these zones with a clear change of character on a lower time frame, not just a stock and I guess. If price breaks below the rising trend lines and takes out the 4,301 level with strength, that would invalidate the immediate bullish continuation and tell me to step back and resist. My main scenario for the week is bullish continuation. The weekly candle is strongly bullish. The daily has broken structure to the upside, and the 4-hour move higher was impulsive. For this scenario to play out, I want to see price hold above the rising trend lines and above the inverse fair value gap zone, using any pullback into these areas as a place to look for buying confirmation. If that confirmation shows up, I would expect price to work back toward the 4,371 level and potentially push beyond if buyers stay in control. This is a scenario with the highest probability simply because it is the one every time frame on this chart currently agrees with. Now, what would change this plan? The price breaks down through the rising trend lines and closes below the 4,301 level. With strength, that would be an early warning sign. A deeper break below the inverse fair value gap zone and back into the order block area would tell me the bullish move is losing steam and the price may be building a larger correction instead of a continuation. In that case, my bias would shift from looking for buys to simply standing aside watching for a new change of character before considering sales. I will not chase price after a big impulsive candle. I will not buy in the middle of the range without a reaction at one of my mark zones. I will not enter without a change of character confirming direction first. And if price never comes back down to my buying areas or never reaches my selling area at the highs, I simply will not force a trade. There is no rules that says I have to be in the market for every week. Before taking anything this week, I'm asking myself these questions. Is the weekly bias still bullish? Does the daily chart still agree with it? Has 4-hour chart shown a clean impulsive structure supporting it? Has the 1-hour chart give me a chance of character at one of my mark zones? Am I entering this liquidity resting nearby, not against it? And am I acting a zone that lines up with the higher time frame picture, not just a random level? A quick reminder before you go, always wait for your confirmation. Do not enter early just because a level is closed. Always protect your capital and use a stop loss on every trade. No analysis is guaranteed. Price can go and will do the expected. This video is for educational purposes only, and it is not financial advice. That is my complete trading plan for next week. Trade patiently and let the market come to your levels instead of chasing it. If you enjoy this kind of weekly analysis, go ahead and subscribe to my channel. I also upload daily or 1-hour updates during the weeks to help you updated as the plan develops. See you in next video. Panda Trader signing off.